Welcome to our financial journey into the exciting world of cryptocurrencies. In today's video, we will break down the most effective strategies for long-term crypto investment. The meteoric rise of cryptocurrencies has sparked a global frenzy, with more and more people eager to participate in this digital gold rush. But investing in crypto isn't like traditional investing, and it's crucial to understand the rules of this unique financial landscape. Whether you're a crypto-curious beginner or an experienced investor looking to expand your portfolio, this video will provide you with valuable insights and practical advice to navigate the turbulent waters of crypto investing. Remember, I'm not a financial advisor. These videos are for educational purposes only. Investing of any kind involves risk, and it is possible to minimize risk, but your investments are solely your responsibility. It is imperative that you conduct your own research. I am merely sharing my opinion with no guarantee of gains or losses on investments. Today, we'll be covering 7 key points. 1. Understanding the cryptocurrency market. 2. The importance of doing your own research. 3. How to set your investment goals. 4. Diversification in crypto investing. 5. Managing risks and volatility. 6. The role of patience in long-term investment. 7. Regular review and adjustment of your crypto portfolio. Stay tuned as we dive deep into each of these points, providing you with a comprehensive guide to long-term crypto investing. You won't want to miss this. Let's embark on this financial adventure together. Let's dive right into our first crucial step, understanding the cryptocurrency market. This might seem like an obvious point, but it's surprisingly overlooked by many. The crypto market isn't just Bitcoin and Ethereum. There are thousands of cryptocurrencies out there, each with its unique features, use cases, and underlying technology. Just like you wouldn't invest in a company without understanding its business model, you shouldn't invest in a cryptocurrency without understanding its purpose. Is it a digital currency like Bitcoin, a smart contract platform like Ethereum, or does it provide a unique solution like Chainlink's Oracle network? It's also crucial to know that the crypto market is highly volatile, with prices fluctuating wildly in short periods. This volatility can be a double-edged sword, leading to substantial gains or losses. Understanding this volatility and being prepared for it is key. Remember, knowledge is your most potent weapon in the crypto market. By understanding the market's nuances, you're setting yourself up for a much smoother and potentially more profitable investment journey. So before you dive in, take time to learn, explore, and understand the fascinating world of cryptocurrencies. It might seem daunting at first, but with every bit of knowledge, you become a better and more confident investor. Stay tuned as we unravel more about this intriguing world in our upcoming points. Now that we've covered understanding the crypto market, let's move on to our next crucial point, the importance of doing your own research, often shortened to DIRE. The crypto world is filled with noise, from social media hype to news articles proclaiming the next big thing. But here's the reality. Not everything you read or hear is accurate or unbiased. Doing your own research is like building a shield against misinformation. It involves thoroughly understanding a cryptocurrency, its technology, team, use case, and the problem it aims to solve. Look at its white paper, check the credibility of the team members, and try to understand the technology it's built on. Even the most promising cryptocurrencies can crash if they're not backed by solid fundamentals. So do your own research and make informed decisions. Remember, your investment journey is a marathon, not a sprint. It pays to be diligent and patient. Before we move on to our next point, if you're finding this information valuable, don't forget to like this video and subscribe to our channel for more insightful content.
Stay tuned.
Next, let's talk about setting your investment goals. Now, this might seem like a basic step, but you'd be surprised how many people skip it. Investing without clear goals is like sailing without a destination. You're likely to drift aimlessly and might even get lost. So, how do you set investment goals? Start by asking yourself why you're investing in cryptocurrency. Are you looking for short-term gains, or are you ready to ride the crypto wave for the long haul? Your goals will shape your investment strategy. Furthermore, consider how much risk you're willing to take. The world of cryptocurrency can be volatile, and it's essential to invest only what you can afford to lose. Having clear, realistic goals will provide you with direction and help you stay focused, especially during turbulent market conditions. Remember, in investing, clarity is power. So set your goals and let them guide your investment journey. Now let's move on to the next essential point. Stay tuned. Let's dive into the concept of diversification in crypto investing. Just as you wouldn't put all your eggs in one basket, you shouldn't put all your money into one cryptocurrency. Yes, you might have favor perhaps Bitcoin or Ethereum, but the crypto universe is vast and filled with potential. Diversification is all about spreading your investments across different cryptocurrencies to manage risk.
If one coin does poorly, others might do well, balancing your portfolio.
It's a strategy that many successful investors use to protect their investments. But how to diversify? Well, you could start by exploring different types of cryptocurrencies, like coins versus tokens, or proof of work versus proof of stake cryptos, or maybe consider projects in different sectors like DeFi, NFTs, or data storage. Diversification can be your safety net in the unpredictable world of crypto. So spread your wings, explore, and diversify. Let's keep the momentum going with our next point. Stay tuned. All right, let's take a big step into the world of managing risks and volatility in crypto. Remember, cryptos are known for their roller coaster price swings. It can be a wild ride, but don't let it throw you off your investment journey. The key to navigating this is to have a risk management plan. This can involve setting a budget for your investments and sticking to it, no matter how tempting a new coin might be. Another approach is to set stop loss limits to automatically sell when the price of a coin drops to a certain level. This way, you can limit your losses. Keep in mind, it's also important not to invest more than you can afford to lose. Crypto investing is a marathon, not a sprint. It's all about weathering the storms and keeping your eye on your long-term goals. Excited to learn more? We've got more insights coming right up, so don't go anywhere. Now, let's talk about one of the most underrated yet powerful tools in the world of long-term crypto investing. Patience is not just about waiting. It's about maintaining your cool while your investment matures. Cryptos are volatile, and it's easy to get caught up in the adrenaline rush of price swings. But remember, Rome wasn't built in a day. Successful crypto investors often share one common trait. They're patient. They don't panic when prices dip, nor do they get carried away when they spike. Think of your investment like a seed you've planted. It needs time to grow and bear fruit. Overreacting to short-term market fluctuations could mean missing out on potential long-term gains. So relax, stay patient, and let your investments do their work. Trust me, your future self will thank you. Stick around as we continue to delve deeper into this exciting world of crypto investing. As we approach the end of this journey, let's focus on the essential practice of regular review and adjustment of your crypto portfolio. Imagine steering a ship without ever checking the compass. You'd soon be off course, right?
It's the same with your crypto investments.
Consistently reviewing your portfolio is crucial to ensure it aligns with your investment goals. The crypto market is dynamic and your portfolio needs to adapt accordingly. But this doesn't mean checking prices every hour. Instead, schedule periodic reviews, perhaps quarterly or semi-annually, to assess performance and make necessary adjustments. Also, remember to rebalance.
If one crypto has done exceptionally well, it might now take up too large a part of your portfolio.
Selling some of it to buy other cryptos can maintain your desired level of diversification. In conclusion, long-term crypto investing is a journey that requires understanding, research, goal setting, diversification, risk management, patience, and regular review. Mastering these steps can help you navigate the volatile yet exciting world of crypto investing. Thanks for joining us today, and don't forget to hit that like button and subscribe to our channel for more insightful content. Until next time, stay invested, stay patient, and stay informed.